Hello and welcome to the live trading hour, which is brought to you by the Live Trade Room, where we look for high probability trading opportunities as we approach the US trading session. We have the cash open in about 5-10 minutes. So we'll see an influx of capital. We want to identify where those opportunities may lie. And then over the course of this broadcast, if we get an opportunity falling into place, then we look to execute that trade live through the broadcast, where we trade the markets with live capital. And we look for opportunities in some of the world's largest markets, foreign exchange markets, commodities like gold and oil, and also the global indices markets as well. So we do have a multi-asset class view of these markets, which is also quite important. Okay, please just take a brief moment to familiarize yourself with our risk warning currently up on screen. Of course, it's very important that you are mindful of the risks involved in trading these financial markets. Okay, so as always, let's begin with a review of potential market moving news. So again, we just want to be mindful of any major news events that are likely to impact our trading decision making. Today is Wednesday, the 21st now of July. These weeks and months are ticking by very, very quickly indeed, it feels. Now there is an important news event, very little for the afternoon really to contend with, but we do have crude oil inventories, and that's an important figure, and we're likely to see some market volatility around this figure. We're looking for a negative figure as well. What we've seen over the last 2, 4, 6, 7 weeks is lower than expected inventories, which is always likely to help push prices higher. Now we've got OPEC have finally agreed to increase the supply, so we'll see what the stockpiles are like currently in the US, and we'll see if we get a reaction in the oil markets as a result. Tomorrow we've got ECB, just to remind you, we're in a couple of euro-based trades, so we'll have some price action in the build-up to this news event tomorrow, and we'll be broadcasting live for this, so if you do want to join us, you'd be very welcome to do so. Okay, so let's get straight into the charts then. We'll see where the opportunities lie. So I'll just drag our trading platform across. Okay, so we're still looking for the euro dollar to continue its move to the downside. The yen pairs we've got a decision making point really for the yen pairs. And in fact for the dollar as well. The flight to safety trade is looking a little bit dubious right now. We've had a good couple of days of really strong moves to the downside. Now we need to watch this very, very carefully, because if this market starts to roll further to the downside, then we can expect the pound dollar, the euro dollar, the New Zealand dollar, potentially the pound yen, and also the euro yen, all to tick lower if this market starts to roll over. We can now look at this trade now as a little bit of a false breakout to the upside. But if this does roll over to the downside, and it's probably a good opportunity to kind of look to take this this price action to just take note of what's happening. So we had a 3-day collapse to the downside. We've had a really strong pullback, which we've seen many, many times before when we get these little periods of selling. And now it's looking like it's got a decision to make. So do we actually kick on to the upside and start making new highs, or will we get this rollover? And if it becomes risk off, then it's likely to support the euro dollar again to the downside, the pound dollar to the downside, the New Zealand dollar. But it's just giving this market a little opportunity to just take a breather, take a little bit of a pause. Downside for the Aussie dollar, eventually potentially upside in the dollar CAD, the dollar Swiss, it's kind of in this long-term sideways moving pattern. Dollar yen is looking a little bit more positive. So we've seen a move to the upside. So that all we really take from that is that the dollar is now stronger than the yen. So the other couple of markets to perhaps keep an eye out for would be crude oil. We're certainly back to the monthly high, which is quite important. We've firmly bounced off the 100 period moving average below today's daily low, and now we're looking like we're going to be breaking back above the monthly high. So we do like this market higher, certainly above the daily high, above the 67.53. We'd expect further upside, but there's a lot of resistance in and around these types of areas, so we can perhaps take note of that. So inside this zone, there's potentially a decent amount of resilience and resistance at these levels. The S&P, it's looking like we're going to get a bit of rollover price action, and the same with the Nasdaq. It's under a bit of pressure, and Dow Jones is kind of reversing off its highs as well. So some of the European stocks have been quite bullish for the European session, and now as we enter the US, it looks like we're getting this rollover trade across the board. Bitcoin's had a nice little bounce back off yesterday's low. Very important level not to break that 29,000, so we got quite close to it yesterday, but no major joy. So we can still maintain our position on the euro dollar to the downside, the pound dollar to the downside. It would still be worth looking at the pound yen just in case we get some rollover price action. The euro yen, the S&P is definitely worth keeping a close eye out for, and perhaps crude oil as well. So last night in our trade plan, we were looking for some risk-on market conditions. Will we see the S&P push higher with conviction? It's slowly kind of grinded higher, but we've not seen any conviction, and prices have rolled back below yesterday's previous high as well. So we just have to wait and see how these market conditions just play themselves out. Just an interesting discussion point, really. We've got the 10-year bond yield just pushing higher. This is the 10-year note. So we had a really strong fall from 140 down to below 120, 118 level. And now we're just bouncing off the lows. So it is creating a bit of a head scratcher for these markets. It just shows that there's significant demand for your longer term bond yields, and that really prevails probably off the back of this kind of strong economy outlook. So we're seeing capital move towards the bond markets in keeping these bond yields low, and we're also seeing capital move to the stock markets as well. So they're at all-time highs, so are very close to them. even though we just had a 3-day sell-off. So it's really a case of where do these markets go from here. If we look at it over the last 3 months, we were up at the 170. This is a very significant rollover to the downside. We started the year kind of breaking out above that 1% level. So as we entered the year, we saw a really significant spike up, a bit of a pullback, and then a really accelerated move to 173. Will we see that again from these levels? We're always likely to see these bond yields actually push higher. As demand decreases, it's likely to push this bond yield further to the upside, and that wouldn't really be good signs for the indice markets. So we're keeping an eye on the longer term bond yields just to see where these markets move from here. Now we're trading these markets in the face of some decent earnings coming out of the US, better than expected performances in companies like Coca-Cola, also Johnson & Johnson and Netflix and Verizon and companies like that. So we're expecting broadly quite positive earnings due out. So really, it kind of depends more on whether we get this rollover in the indice markets or not. We'll see if there's any sort of major news developments.
I do apologise, was experiencing some technical issues with our audio service over the last half hour or so. Issues do now appear to have been resolved. Once again, apologies for any inconvenience. One change that we can make to this euro dollar trade is the market is continuing to make lower lows, so that's really an important thing to notice. We're continuing to make lower lows, and broadly speaking we're making lower highs as well. So we're clearly in this little move to the downside. Now the volatility is not as extreme as we would like it, and you could argue there's these little significant pullbacks of false breakouts to the downside as things currently stand. But as long as we continue to make lower highs and lower lows, then we can look to stick with it for sure. Okay, so so what we can do is we can just take this little high in here, which is the 1823. We'll just take that little risk off that trade. I thought we did this yesterday, but we clearly haven't. Further comments from the UK's Brexit Minister Frost.
and comments made already. He said they want a new path and to negotiate a new balance with the European Union. That's in relation to the Northern Ireland Protocol, saying now that they've chosen the way of negotiation and compromise. Possibilities are exciting if the EU does choose to engage.
So it's the 1827 level. So bringing our stop loss down, mitigating risk wherever we can, and Okay, apologies for that. So really we're in the euro dollar to the downside. We are still in the pound dollar to the downside, and the New Zealand dollar as well. Now we're seeing these little sort of risk on type market conditions basically filtering to this market. So what that means is we're pretty much at a decision making point. Will we get a correction in these markets? We're very likely to do so now. The big one is the S&P 500. Where from here? Do we kick on and make new highs, or actually do we start moving lower? The problem with the S&P is and the US indice markets, we'd certainly expect a bit of a corrective move here in crude oil. So that's a viable trade. We're above strong levels of resistance at these levels. So breaking above the 68.39, we might see further upside in that. But we've got crude oil inventories at 330, so in about 2 hours time. So the last thing we want to do is to get into this trade for a small bit of upside and then just get slammed to the downside just in case it starts to react in a negative fashion. So really it's one of these trading sessions where we're in this transition period. Will we start seeing some capital move towards risk, or will we actually see these risk off conditions prevail even further? So because of that, we're going to stick with our current open trades. What we'd like to see is the S&P roll further to the downside. Whether that will happen or not, we'll have to wait and see. And we can certainly expect a short-term correction in the euro yen and pound yen. So not the most productive of trading sessions today. We are entering kind of summer market conditions now as well. So what it means is, broadly speaking, longer periods of limited price action, followed by probably fairly short periods of quite explosive price action, and that we very well may see that for the remainder of this summer. Now we're taking some time off in August. We're moving office. There's lots of stuff happening in the background, but we'll be back live every day again from September onwards. So going to take a few weeks off in August. So we're actually finishing up at the end of next week, I think, if I'm not mistaken. So bear that in mind, and we'll be nice and rested when we hit these markets in September, and we'll see how we can get on with these trades. So look, on that note, I'll let you guys go. We're in a little bit of a transition phase at the moment with these markets, so probably just be patient and just make sure you've done your due diligence with these trades, and we'll see if we can get some price moves. Okay, so look, on that note, thanks as always for joining us. We'll be back again tomorrow at 12:30. We've got the ECB tomorrow to see how this euro reacts to the ECB news event tomorrow at lunchtime. That's UK time, of course. So let's see how we get on, and we'll just monitor these markets for the remainder of the session and see if we get any moves in these markets. But there's a lack of volatility, so don't be surprised if that's the case. Okay, so on that note, thanks as always for joining us. Do take care, and we'll look forward. We'll be back again tomorrow at 12:30. Try and give us a thumbs up if you can, and obviously subscribe to our channel. We'll be notifying you if we go live, or every time we go live, should I say. And we'll see you tomorrow. For everyone here, take care and bye for now.